And we are live. Welcome back, ladies and gentlemen, to another All-In Crypto live stream. And the topic of this live stream is going to be getting you guys ready for Wednesday. We are, of course, going to be discussing what is coming up with the Fed set to make the first rate cut since pre the March 2020 events, and how the markets are going to react to this is, of course, what we're really interested in. We're going to be doing a number of things in this video. We're really going to be starting off with what to expect on Wednesday. We'll be reiterating the idiosyncrasy that is out there in regards to the expectations that every time the Fed cut interest rates, the markets crash. We'll be looking at the past 14 times the Fed have cut interest rates and what the S&P has done 12 months prior to the rate cuts or post the rate cuts. We're going to be looking at a number of takes from the likes of Goldman Sachs, from Morgan Stanley, from a number of analysts out there in regards to what they're expecting on Wednesday. And then we're going to talk about the broader ramifications for the cryptocurrency market. Of course, we'll be giving our own take on all of this as we go through. But I think a good place for us to start is in regards to Bitcoin. So if we dive over to the Bitcoin chart, you guys will know that in our daily market updates, we've been highlighting a number of technical patterns that all give us confluence in regards to the direction that Bitcoin is going in, and why this is an important live stream, and why we watch things like big macro drivers like what the Federal Reserve are going to do is because that bigger picture needs to be right in order for our smaller picture, being the cryptocurrency space, stands at, I think, what is it, $3 trillion, not even $3 trillion in market cap. Ultimately, the big picture needs to be right to see the small picture take place. And we've got a number of technical reasons in regards to Bitcoin and the crypto space more broadly that point in that direction. And ultimately, the main driver of the markets is going to be the largest manipulator of money out there, which, of course, is the Federal Reserve. So we'll break all that down. To kick things off, Bitcoin down around about 2% today. And Bitcoin has largely been in a consolidation pattern that we ultimately believe is going to break to the upside and see what is clearly an uptrend. Not only do we have those three patterns that we've just had on the screen to contend with, we also know that we are in an uptrend, and the trend is very much your friend. We did an exercise a couple of live streams ago, which we're going to start, or we're going to be redoing, where we looked at a number of other charts that were where Bitcoin is, that went on to higher prices. So if we go ahead and we pull up those charts, you can see what we're identifying in regards to the largest pattern that we have that takes us to 309,000 is a cup and handle. It's very, very common when you go to new all-time highs. You first put a toe above it, then you come back in. It acts exactly as resistance, which is what resistance should do, act as resistance. You consolidate in a descending fashion, often volatile, before you then break to the upside and see that broader continuation. We showed you VanEck Semiconductors or VanEck Semiconductor ETF. You can see you put a toe above the waters. You're testing the waters out. You come back and you consolidate. If you look at the consolidation for VanEck Semiconductors, very Bitcoin-esque, and we'll go to it. You can see this is essentially what we're looking at. You can see the swings that VanEck Semiconductors ETF had, putting a toe above it, just like Bitcoin, before then seeing that broader continuation. I would guess that Bitcoin is round about here, ready to embark on a broader uptrend. And what this live stream topic is about is potentially going to cement and solidify that. Don't worry, guys, we will get to your questions. As always, likes and comments are appreciated. But it wasn't just, as a technical analyst, really what you're doing is you're spotting patterns that have a good probability of going in a certain direction, or setting a chart in order to go up, in order to go in a certain direction. And you're looking for them to play out again. So when we look at VanEck Semiconductors, it's a perfect example of course, what Bitcoin is doing today. We looked at, of course, Microsoft. We've still got broader targets for Microsoft. If Microsoft's going to be going up, what's Bitcoin in the crypto space going to be doing? What's the environment that sees that come to fruition going to be doing? Of course, similarly with VanEck Semiconductors, you can see toe above all-time highs, consolidation in a volatile manner before continuation. Also, if you look at the DAX, this is another great example. Toe above, consolidation, descending pullback in what is a broader uptrend. You'll see the DAX is still very much respecting its broader uptrend. Obviously, we showed you the NASDAQ. This is a smaller version, and you need to apply a little bit of nuance when it comes to the markets. But you can see the NASDAQ Composite Index has done this many, many times in regards to taking new all-time highs and then starting a broader trend to the upside. You can see on both the bigger and smaller timeframes. And of course, we looked at gold and so on and so forth. So gold's a big macro pattern. A little bit all over the place here, guys, with the charts. We do apologize. We're still getting used to doing these live streams, so do bear with us. Very interesting as well, isn't it, how gold has nearly made that inverse head and shoulders target. So this was all called pre-break. You can see your inverse head and shoulders, your right shoulder, your head, your very sort of pointy head, like a witch's hat, your or your left shoulder, your head, your right shoulder, and then that broader continuation to the upside. Nifty 50, also a good example. You know, you can see all-time highs, pull back before continuation. Very cup and handle-esque. And that is essentially where we believe Bitcoin is today, ladies and gentlemen. And we're experiencing a little bit of volatility today. I think that's to be expected with such a monumental event taking place on Wednesday. And that's what we're all here to talk about, what's going to take place on Wednesday. So the crypto market coming into a little bit of resistance. You know, if you look at this sort of broadening, descending pullback channel, you can see this resistance, this sort of splitter, if you will, resistance, 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 you know, support. Support often turns into resistance. Ultimately, it's going to be a case of taking this. And I think that you might get that towards the back end of this week, depending on what the Fed is ultimately going to do. And that's what we're going to talk about. So we have the expectations that the Federal Reserve is going to cut interest rates for the first time since the events of March 2020 or 2019 going into 2020. We know there was issues with the reverse repo. Obviously, when they upped the debt ceiling, that got drained. There was this kind of clog up, if you will, that need for liquidity. And then subsequently, we had a major liquidity boosting event. Is that a coincidence or not is for you guys ultimately to decide. But since then, the Fed has essentially been pretty much on a hiking regime. So if we look at exactly when the last interest rate cut was, it was around about July 2019. You can see, obviously, the events of March 2020. They locked everybody down and then caused a hell of a lot of inflation due to increasing the money supply. And then they've been on a hiking regime to essentially try to combat inflation. We'll look at the two mandates they had because this gives us further confidence in regards to what they're going to do. Dollar catching a little bit of strength for the Dixie. We'll talk about the Dixie because why is all this relevant to us as crypto investors? Well, we'll speak about it. And that really comes from central bank manipulation of currency, thus providing a risk on or risk off environment. And we've covered this time and time again. And actually, if you look at every bull market that Bitcoin's had, there's been an element of Dixie weakness, dollar weakness. And if you look at every bear market that Bitcoin's had, there's been an element of dollar strength. We've gone through that dollar strength. We're on the other side of it. And of course, since the dollar topped, this was also signaling what was going to come with monetary policy. Your risk assets bottomed at the same time the dollar topped. And further continuation in that broader downtrend for the dollar is going to see risk do well generally. So we're looking at the first rate cut in nearly 5 years. Pretty significant. Just to address that, and we call it an idiosyncrasy because we're deliberately being, offensive isn't the word, but we're deliberately being kind of dismissive of what's propagated in regards to rate cuts being negative for the markets. This simply is not the case. And this Schwab report sums it up perfectly. If you look at the past 14 times, the Fed have cut interest rates. From the first rate cut, this is looking at the 12-month return of the S&P. And you can see back in 1929, it gave a 3.3% return. February 1945, or 55, sorry, the dyslexic can be jumbling the letters there up on the screen. I'm sure some of you can relate. I'm sure we've all got a bit of something nowadays. If you look at November 1957, 31%. June 1960, 15%, 12-month return for the S&P. April 1967, 4.6%. And 1970, 13.3%. December 1974, 33.5%. Obviously, May 1980, 20.3%. November 1984, 20.4%. June 1989, 11.4%, and July 1995, 21%. And then the two anomalies within the 14 previous times the Fed has lowered interest rates or made that first rate cut are, of course, January on the back end of the dot-com crash, minus 13%, and obviously the 2008 financial crisis, where the Fed initially lowered interest rates in 2007. I want to point out that there was two specific events that were relevant to the anomalies here. Of course, the dot-com and telecom crash, which we don't envision is happening just yet. I don't think crypto has even got anywhere near the size to cause an economic downturn. You've got to remember that the supply of money and liquidity generally for assets was significantly lower back in the 2000s. And this is an interesting fact that we always bring up, is the dot-com bubble in terms of size got to $5.5 trillion, nearly double where the cryptocurrency space is today. So this market has a long way to go. Our best guess is that we're going to see the $6-7 trillion certainly this cycle. I think there's, that's a very pessimistic outcome. I think there's a lot of room to sort of overperform that. So with the Fed lowering interest rates, we are ultimately expecting that to weaken the dollar, which is going to be a good environment for risk. There's $6.4 trillion in money market funds out there. Now, a lot of this is corporate, so a lot of that will be staying there. But there's going to be trillions that are going to flow out of those money market funds that are getting that risk-free 5.5%, some even higher, back into the markets through hunting through yields. And we saw a great example of how central banks, the BOJ in this case, the Bank of Japan, manipulates the Forex market through monetary policy, and thus the markets more broadly. Remember, the Nikkei is a short yen trade. We'll talk about that once we've looked and prepped people a little bit more for what's coming on Wednesday. So the expectations as it sits right now, this has changed massively. Going into the start of last week, this was more in favor that they were only going to do a 25 basis point rate cut. Today, we have a 57% chance that the Fed's going to do a 50 basis point, so half a cut. A basis point is 1% of a percent. So they're going to do a 50 basis point cut. There's a 57% chance that happens. And there's a 43% that they do a 25% rate cut. 25%, 25 basis point rate cut. Now, both of these outcomes, according to Schwab's research, are bullish for the markets generally. Certainly the S&P. And you've got to remember, crypto is a higher beta to the S&P. It's going to overperform it, and it's going to underperform it in terms of downside, or I should say, overperform to the downside, overperform to the upside. And we are expecting upside for the markets more broadly. We pulled up Microsoft. Still got upside patterns for that. We looked at Tesla going to $505. Amazon. We've got lots of small cap stocks as well that are really just breaking out of their phase ones into phase two. The stage really is set, ladies and gentlemen. And a big catalyst for all this to take place, not just technically what we've spoken about in the charts but also on the kind of macro in regards to cycles, the Bitcoin 4-year cycle playing out, the global liquidity cycle playing out, the business cycles playing out, the election cycles playing out. If you look at how elections typically impact the markets, there's cycles that go within that. The catalyst to all of these playing out, we believe, is the Federal Reserve lowering that interest rate, cheapening the dollar, if you will, and seeing essentially the adverse of what we saw with the Bank of Japan. Remember, the Bank of Japan only upped interest rates for the first time in my lifetime by 25 basis points, so 1/4%. The Fed might be about to do a bigger cut than their hike, and they're a larger central bank. We also had the European Central Bank last week they did lower interest rates by 25 basis points. So if we look at where the Fed's at in regards to other central banks, I think other than the Bank of Australia, which is in green here, most other central banks are significantly lower. In fact, the European Central Bank is already at 4%. So there is definitely the room for a 50% Fed or 50 basis point, get it right, all in, Fed cut. 25, I think, is bullish. 50 is great. I think there's still uncertainty with the markets. I think if you see that 50, you see more of a positive reaction, of course, than a 25. Anything over that, and you've got the likes of Senator Warren calling for, of course, we've got an election coming up, right? You've got the likes of a number of individuals calling for 75. And there has been shock 75 basis point rate cuts before in the markets, and we'll look at all of those. So our expectation on Wednesday is very much a 50. We've been talking about this for a while, but we think this is going to come to fruition on Wednesday. Ultimately, we think that's setting off a broader bullish environment, or a broader accommodating environment for the markets. And this is really, this is why technically, when we've got all these sort of patterns playing out, or we've got patterns that are predicting higher targets, whether that be in Bitcoin miners, Bitcoin equities, whatever it may be, crypto equities more broadly, it's all on the back end of this. So this is very, very, very important. And in regards to why perhaps the Fed are going to be enabled to lower interest rates, well, there's a number of reasons. What's the Fed's mandate been? It's been inflation and a labor market. And we've gone from a great labor market with low unemployment and record jobs added to the economy, or massive beats in regards to expectation. I think this has a lot to do with obviously the shutting down and then the reopening. And this is why we're seeing a lot of indicators get like the Charmin index, all of these things sort of get thrown out the window because these indicators, just like Plan B stocks of flow, has never had to deal with the events like what we've seen. It's interesting, regardless of all these events, as a side note, Bitcoin is still very much following that 4-year cycle, which gives us confidence it's going to continue to play out. The anomaly really is Bitcoin's usually a lot lower down in regards to its all-time highs, never goes on and puts in an all-time high pre-halving. It has this time. That's obviously due to the institutional involvement. That's far more bullish than it is bearish. So there's fundamentally a million and one reasons to be bullish on the cryptocurrency space. There's reasons to be bullish on the macro. Technically, when we look at the charts, walks, talks, quacks like a duck, ladies and gentlemen. It's a duck. Let's get those duck emojis in the chat. So talking about why the Fed are likely going to do this or the runway they have to do this, their main mandate, of course, has been inflation. We saw inflation, if we go to a 5-year graph here, get all the way to 9.1%. The last print that we had last week was 2.5. Their mandate is 2%. They've said they don't need to see it get all the way down to 2%, but they need to see continued progression to start taking their foot off the gas. The 5% rate was really to combat far higher levels of inflation than 2.5. So there's absolutely room for them to take their foot off the gas. If you look at true inflation, which true inflation's good, it gives you a kind of direction perhaps, and some people say it's more accurate than the government stats. Government aren't great at many things, but we won't go there. If you look at Trueflation, I think that has yesterday, or it might have even been today, you had 1.1 in regards to what they have CPI at in the US. Worst story in the UK, we're at 3.3. We've kind of gone up some. You also have the Bank of England rate decision. The Fed's the main driver, really, but the Bank of England do have a rate decision this week. I think they're actually set to hold rates. Regardless of that, we have looked at UK housing. We think UK housing is going to do very well. We got clowned for that video, but if you look at some of the UCITS and things like this, the REITs that we looked at, the ETFs in regards to UK housing, they've all done and gone significantly higher than when we were looking at that. And we expect that to continue. Fundamentally, that makes sense with interest rates coming down. And if you certainly live in the UK, you'll know that certainly where I am in Scotland, I know people who are mortgage brokers. I know people that work in the sort of real estate sector, certainly in regards to renting out houses. They'll say they'll put something on the market to rent, and by the sort of afternoon, they'd have been sort of flooded with calls to actually rent that. It's a very fierce market right now. So not to talk about UK housing too much, but again, that gives us further confidence in regards to global liquidity, all of this stuff. If we look at CPI, 2.5%, the Fed don't need to have a 5.5% interest rate. That's or one of their mandates that they've, I think, largely done a good job on. I've continued to say, I don't think that the economy is doing as badly as people make out, or what you see on TikTok. You see these people crying about the prices of food and things like this. And there are some heartbreaking stories out there. But is that the general picture and consensus? I don't believe so. Certainly any of you that go out to restaurants, or most of you go out to restaurants, they're packed. Certainly here in the UK where I am. But they've definitely got the room or the ability to lower interest rates from a sort of inflation point of view. And their other mandate, of course, was unemployment and ensuring that the labour market remained in good standing. And you can see we've seen an uptick in this. That gives them sort of further reasoning to actually cut rates also. So we're absolutely sure that they're going to do a rate cut. This year has really been, along with Bitcoin sort of selling off really, or pulling back, we should say is the better term for it, since March. This year has been a year of Fed rate readjustment in regards to expectations. We went into this year predicting far more. I think it was like 150 basis points was supposed to have already happened if you look at what the expectations were going into this year. There's been a readjustment of that. Markets will readjust. The markets are always forward-looking. We think that's why things are up in the manner that they are, because ultimately they know that where we are today was coming 6 months ago. The markets are forward-looking, and we think there's going to be broader continuation from that. So both their mandates, a strong labour market and inflation. The inflation, I think they've largely done the job on. It's kind of undeniable that we might see a resurgence in inflation. Certainly if we look at the cycles we're looking at, we look at assets doing well, that's not going to escape, depending on potentially even who gets elected and what their policies are in regards to energy and things like this. But we think inflation is largely a slain beast. Yes, the prices are already higher now, but are we seeing that continual annual increase? I don't think so. And they've now got to worry a little bit. They've got to try and goose the economy, stimulate the economy, if you will, to see the jobs market remain intact, the labor stats remain intact, and also you're getting probably worse than expected things like PMIs and things like this. So if we look at US PMIs, there's a number of reasons why cutting rates makes a lot of sense here. This works in a cycle. There's been a Bitcoin element in all of this. So let's take a look at some sort of takes on this, and then we'll dive into what this rate cut means for the dollar, the Dixie, and what in turn that means for our markets. And the altcoin market is going to absolutely fly when there's that kind of clarity. Markets don't like uncertainty, and the more volatile the market, the more sort of turbulence it witnesses under that uncertainty. If you look at Bitcoin's pullback, the altcoin market's just followed it. The difference really being is the altcoin, it's not unusual for altcoins to sell off 60%, even in a basing range. And that's why positioning in the crypto space can be pretty hard. If you talk to most of your so-called traders out there, a lot of them don't do too well in crypto. They'll do far better in the Forex market and things like this, which is more plannable. We'll talk about the Forex market a little bit, certainly in regards to the dollar coming down. But if we take a look at this, this is from Walter Bloomberg, and it's looking at Bill Dudley. A 50 basis point cut would also fit well with the Fed official next set of economic projections, which they will publish this week. Markets are expecting a total reduction of at least 100 basis points, so a full point, taking us down to 4% by the end of 2024. If the Fed does only 25 basis points now and projects another 50 basis points at its next two meetings this year, it will send a hawkish signal. If it does a 25 and projects more than 50, people will wonder why it isn't cutting more immediately. The larger cut thus helps the Fed get out of this predicament. Also, you've got to think as well, you've got an election coming up. They're going to want to be seen to be stimulating the economy going into that. Certainly the current regime, which of course Harris is the head of. So that's an interesting take. Democrats, senators calling on the Fed to do a 75, so 0.75% basis point rate cut. No, this is not political at all. Good little comment there, because of course they would be wanting to be seen to sort of stimulate the economy and help the little guys out. Ex-New York Fed, Bill Dudley, we've already looked at this, going for the 50 basis points. Elizabeth Warren, the infamous, the crypto kind of nemesis, if you will, urges the Fed to cut by 75 basis points on Wednesday. So there's a number of calls coming for a 75. Obviously, this is JP Morgan, Fed to cut rates by 0.5%, so 50 basis points. And we've got Deutsche Bank. Our analysis, including insight from our AI tool, suggests recent media hints towards a 50 basis point rate cut are weakened compared to the lead up to June 2022's infamous 75% hike. So that's interesting. One thing I will say in regards to, so our sort of bias is they're going to do a 50 basis point rate cut and the markets are going to enjoy that. I think the markets will still enjoy the 25. Anything over that, the markets will absolutely love because that'll be a bit of a curveball. And in regards to cutting cycles, they typically don't do it. They don't hang around when it comes to cutting interest rates. And you can see that's been historically true. And the Fed also have the room to cut based on where other central banks are. I think the reason you've seen other central banks, despite the fact that the US has had lower inflation than many other sort of economies out there or demographics in regards to Eurozone, the reason that the Fed hasn't gone first is because they don't want the dollar, which is the world reserve currency, to lose too much steam. And the dollar will lose steam under the back end of rate cuts to more of a degree than other currencies out there, for the simple fact that in regards to debt, the dollar has more of it. Which means when they were upping interest rates, even though other central banks were doing it at the same time here, the dollar gained strength because it's a bigger market in regards to the debt market. So people need to get more dollars to fund it. And the same thing is true when they cut rates. There's more wind taken out of its sails, and it will lose ground in regards to the other currencies out there. This is why we have targets for Great British Pound versus the US dollar, Euro versus the US dollar. We think there's bottoming for the CAD US dollar, also the Oz US dollar, Japanese yen US dollar, we think is going to do very well. The stars really are aligned when it comes to dollar weakness. And this is where the relevancy in regards to our space comes in, because there's been an element, and I'll show you this right off the bat. There's been an element of dollar weakness in every single Bitcoin bull market. And there's an element of dollar weakness in assets doing well broadly. And it makes sense, right? If the dollar is strong, it means people are going into dollars and typically out of assets, and vice versa. A little bit more technical like that, but just very general. You know, if we look at the bull market that took place in 2010, 2011, dollar went down. Dollar asserted, bear market. If you look at the 2013 bull market, it was on dollar weakness. Dollar asserted, bear market took place. Dollar topped, rolled, weakness. 2017's bull market, again, assertion, bear market. And these tops are pretty much symmetrical. Obviously, on the back end of all the stimulus that came after March 2020, dollar weakness, markets up. And then dollar strength on the back end of inflation, which we've just looked at, is you very much got the adverse of that going on now. And you can see Bitcoin entered its bear. Dollar topped. Bitcoin was slightly later to the party than others, simply due to the FTX fiasco. It's going to be interesting now that Gary Gensler has came out and essentially said that the underlying cryptos don't warrant securities, and that's not what he meant. I feel so gaslit by that statement, by the way, guys. I'm sure some of you can relate, because the war that he's waged, I mean, he's literally definitely accused the actual cryptos of being securities. Definitely in the Ripple case for sure. And now he's came out and said, oh, it's just it's a shorthand. You know, we just call them crypto asset securities. You know, it's a helpful saying that we use. Well, you've literally stifled this industry as a result. You know, there should be ramifications. I personally, even if Harris wins, I'm not, you know, she's talking perhaps about having him as a treasury. I'm not convinced he hangs around, because he's just done such a bad job. And this is a guy that went from teaching at MIT about blockchain to mishandling this industry in the manner that he has. You can only but derive the view that, you know, he's done that on purpose, and, you know, maybe somebody's helped him get in that position, and he's kind of helping them back. We know he was ex-Goldman, and of course we know the stance that Goldman has. Not Goldman, sorry, JP Morgan. He was ex-Goldman, so a little bit confusion there. But if we look at what we're now going into, we expect continued dollar weakness, and the dollar will typically be weak because of what we fundamentally just explained there in regards to the effects of interest rates. You know, interest rates typically lead the dollar. You can see this. Interest rates down, dollar comes down with it. 2-year yields lead the interest rates. Typically, they're very much at 4-ish% now. So we're expecting cuts. Certainly the markets are, the bond markets, the largest markets in the world are. This coming down is going to see that further. It's fundamental to seeing that further dollar weakness. We've got a number of technical patterns that give us confluence to that. We've just shown you in regards to crypto that dollar weakness is good for it. It's not just crypto. You know, if we put something like the S&P on here, you can see it's very much the same story. And the dollar topped, the S&P bottomed. So continued dollar downside is going to see risk do well. And I think crypto is going to be the best performer for the asset, is it? This is where this is all relevant to us. So not only do we have this broader channel that you've been in since 2008, when QE kind of officially started, in the form that we have it now. There was a Goldilocks economy further back than that somewhat. But we also have, so looking at this broader channel, it's very logical that you're going to come to this lower band of the channel. The interesting thing is we have a technical pattern in it here that gives you a 97.37 target, which is a dollar continue to roll. We're calling this up here. It's very much followed the way. Dollar ran into a bit of support. That's leaned a little bit on risk. Ultimately, we think this is going to see continuation to the downside. When you look at the likes of GBP USD, remember the Dixie is the dollar versus other currencies. This is looking for more upside. Euro USD, whichever way you look at it, broader upside patterns. CAD USD, very much basing. Oz USD, sorry, AUD USD, very much basing, likely going to do well against the dollar. This all means the dollar is going to come down. And of course, we know what that means for the cryptocurrency space and the markets more broadly. So it's a case of allowing it to play out. When we go back to what we said at the start of the video, this is the beautiful thing about being a technical analyst. The markets kind of open up to you, if you will, certainly when you can cross-analyze them. So we've really covered the macro, what's about to take place on Wednesday. And then when we look at the crypto space on its own merit, we're looking at Bitcoin here, but you can look at miners, you can look at ETPs. It's a great picture that is painted. I mean, it truly is. So it's really just a case of hanging in there. We're seeing a bit of a volatile day today with Bitcoin. you've got such a big event coming on Wednesday that the market's likely going to be a little bit apprehensive. In regards to sentiment in the crypto space right now, again, that news that Gensler or the SEC literally came out and admitted that they don't believe cryptos are securities, and that's not what they meant. You could have fooled me and you. They did fool me and you, I should say. That didn't really seem to be as big a news as I thought it would be. That's monumental. It has really broad ramifications for the crypto space as a whole, especially in regards to institutional adoption of crypto and corporate adoption of crypto, which is coming. And it's not here yet, largely. We've seen huge success in regards to Bitcoin. We looked at Jim Bianco's tweet in regards to saying that the Bitcoin ETF had failed. I don't think so. I think actually, if you look at it, it's the fastest growing ETF in history. That says a lot. It's probably got a far larger money supply to be able to do that. There's more money in existence. So, that's perhaps a little bit of a pushback to it. But generally, it's seen great upticks. Ethereum in the past 12 months, only second to Bitcoin in regards to the fastest growing ETF. You will see the markets open up. And certainly when these cryptos start to get used and adopted in the real world, it's largely not here yet. If you think about real world applications that use blockchains, name me some. There are a few. Don't get me wrong, but in regards to a mass used and adopted, I mean, Avery Dennison over on Hedera, anybody's familiar with Avery Dennison, there's some great use cases already, but the floodgates are going to get opened. And you're going to see, not only are we looking at sort of this cycle being bullish on this market, there's an amazing picture in regards to more broadly the reasons why you should be bullish on the crypto space. It truly is a technological revolution in more way than one. The current application, of course, or the one that most people speak about is Bitcoin replacing money, although it will never practically do that. But it goes far beyond money. We've seen DeFi and finance, and then people have gone, okay, if we can sort of figure out a way to decentralize and incentivize finance, well, what can't we do that with? And actually, in regards to smart contracts, they're a very useful tool. If you look at how the internet works, actually, you can replace a lot of the connective tissues that often get hacked with smart contracts to make them immutable. Certainly in regards to AI, crypto is kind of goes hand in hand with it. So there's a very bullish long-term narrative, short to mid-term narrative, and certainly this cycle narrative that we've sort of laid down for you. And that largely all pivots around the Fed, their actions, and what that means for the markets more broadly. My take is they're going to do a 50 basis point rate cut on Wednesday. We'll be live streaming it live. We'll be giving you some commentary on it. But ultimately, this is going to play through to the markets. Perhaps not immediately. What you often get when it comes to events like non-farm payroll, I always see people trying to trade non-farm payroll. You've got a 50-50 chance, and you might get whacked both ways. You want to be positioning before it, and then typically you'll have volatility around the event, because what you have is people are positioning what they think is going to happen, perhaps 70%, and then they'll add the other 30% on after, or take off if it doesn't go their way. So you get real volatiles event around it. This could be the same. You could see a similar thing taking place on Wednesday. So generally, it aligns with our thinking on the markets broadly. However, expect volatility when it comes to the markets, certainly the cryptocurrency markets. I wouldn't be surprised if you see a negative reaction. However, I don't think that will be long-lived. It sets in motion a broader trajectory in our assessment. So we will now dive over to some questions. We've really just covered getting you guys ready for Wednesday and what to expect, and the things that we're looking at surrounding it. The important thing is, certainly what we've tried to impress on everybody here on the channel, is that pay attention to that broader picture. The game of investing is to put your money into something now for tomorrow, not expect things to happen overnight. And ultimately, if you position in the altcoin market, altcoins very much in their phase one accumulative phase. Bitcoin, Ethereum, Solana, largely the anomalies due to institutional involvement, but actually altcoins exactly where they should be. If you're positioned now, you've got that beautiful upside to come. And the areas I'm interested in, we've got one Bitcoin miner in the Patreon that we think is a 27-ish X, 26X. Lots of altcoins that we think are going to do significantly better. We could be totally wrong on it, but we think when we look at the macro, when we look at the sort of technical picture of things, the stars really are aligned. So what I want to do now, guys, now that we've sort of covered all of that, is dive over to your comments. And I'm sure we've got a few. So I'm going to go ahead and open up my tablet so I can see. Lots of comments rolling in. Keep them coming, guys. Please do an Algorand video. We will do an Algorand video. We're also going to look to get John Wood back on the show. John Wood is one of my favorite people in the cryptocurrency space, and we'll get him back on. I followed him when he was a CTO of Cardano. He's now CTO of Algorand. I'm glad he went to another sort of worthy project. Let's dive into some of your questions. So I'm thinking alt season is Q1 2025. What are your thoughts? Let's get into that. So what I'm going to do is show you on a cyclical basis when alt season actually takes place. This is the beautiful thing. We really encourage, I don't think, my personal take on trading, I've really changed my view on it, is that most people shouldn't do it. You've got a job, you've got kids, you've got family, you've got friends, you want to have a life, don't bother trading. And if you certainly, and there's always this thing that's put forward with traders, is they should be like something off of American Psycho or something. That's not the reality when it comes to trading. Most people aren't like that. Thank goodness. Most people shouldn't bother trading, but what people should do is learn to invest, and learn to invest via understanding how markets work in regards to their cycles. Markets work. The Bitcoin 4-year cycle is a great example of how markets work. It's very Wall Street cheat sheet-esque, which is gimmicky, but actually what that's really showing you is the underlying ebb and flows of markets. Markets work in this kind of 4-phase cycle. Wyckoff spoke about it. Dow spoke about it. Stan Weinstein spoke about it. We speak about it. We've kind of evolved it, I think, a little bit and applied it to certainly the crypto markets. But everybody should learn technical analysis. And what we can say is, in regards to the question on when's alt season going to start, if we put Bitcoin dominance on here and where Bitcoin dominance rolls in relation to a benchmark that we have, which is the halving, you can see that alt season typically takes 224 days to take place. This is where we put it on the monthly because it's even less. So there's a little bit of, because this is a 2-week time frame, it's around about 215 days. So if you look at the Bitcoin halving, come on, I'm going to get some comments on that, I'm sure, but comment away. And you look at Bitcoin dominance rolling, it typically takes, and this is alt season taking place when Bitcoin dominance rolls, doesn't mean Bitcoin's going down, means the whole space is doing well. We don't think we're that far off it. Typically it's 215 days. So 215 days from the halving in 2016, Bitcoin dominance then roll and alt season fully kicked off. This one also, coincidentally perhaps, took 214 days for Bitcoin dominance to really roll. 214 days from now takes us to the 1st of November. You've got October ahead of us. You've got a number of things ahead of us. I think your alt season starts sooner. And certainly many altcoins have not only broken out, something like ICP, show you this. We could show you many examples. We've done 2 videos now showing you 10 altcoins, including Dogecoin and Shiba, that have not only broken out. When we look at breakouts, the stages to a breakout. Basing range, double bottom, breakout on volume, declining volume, retest. You're going to see broader continuation, that phase 2 take place out of the back end of that. If you look at something like Shiba, I'm not a fan of Shiba and Doge, by the way, but guess what? I also wasn't a fan of Shiba and Doge in the last bull market. I made a video saying, why would anyone buy these? They're garbage. There's nothing behind them. You've got cryptos out here that are fundamentally changing the world. Went on to be the best performing asset. Markets don't care what you think at all. You should be the only person that cares what you think, and always understand that the markets, they really don't care. But if you look at Dogecoin, for example, breakout, volume small here, but we can enlarge it on volume, which is very important. It shows a conviction behind the move. Retrace on decline in volume. Now you're basing, look at where your volume's starting to pick up. Big wicks coming in here, also support. You're going to see continuation on the back end of that. Let's pull up Shiba for the memers in here. And it could be full meme season on the back end of the 50 basis point or 75. Oof. I don't think they're going to do that, by the way. Let's just go ahead and find Sheeb. Sheeb USD. See what we're looking at here? Breakout, retest, continuation. Markets often move in a very similar fashion to what they've previously done. And why is that? Well, it's because human beings are behind them. And there's psychology and technical patterns, there's psychology in many things. So long-winded way to answer your question. I hope I've done it. Typically from the halving, it takes about 214 days to take place. That takes to the 1st of November. So you've got a month or so before alt season really starts to kick off. And I think alts are likely going to, certainly if, depending on what happens on Wednesday, which we've looked at, whether it's good or bad, I think the broader trend is in motion. Alt season, I think, is going to kick off this year, certainly go into Q1 2025 and likely continue throughout the remainder of that year. So let's go over and take a look at some more questions. Also, guys, let me know how you are liking the live stream. You know, we're going to do far more of these. Hello, mate. Is your prediction on HBAR still $2? Yes. So our $2.05, to be precise, HBAR prediction, I'll just talk about it, was based. I'm not just going to talk about it. I'm going to show it. Was based, and Hedera's my largest position, by the way. I think Hedera is going to do really well. It hasn't thus far. I have to say that. So this is how we got to $2.05. And we were looking at this here. We all know the story. We've got Brandon the HBAR bull coming on today, actually. It won't be live, though. We'll get that recorded and posted more broadly. We looked at that prediction here. It was based on this double bottom target taking you here. So this is what we were expecting. You were going to sort of interact here, put in some sort of a right shoulder, and then we could get an inverse head and shoulders pattern that could take to $2.05. I still think that could take out. It's obviously not going to take out in this double bottom pattern. I still think Hedera is just in a range and going to break to the upside. We've got Hedera video coming out after this one. Do watch that in regards to where Hedera is currently at. And it now is not the time to be giving up hope. I think now is actually the time to be almost doubling down. So that's how we got the $2.05 prediction. There was a number of things that had to play out. We did take this on volume. It looked amazing. And then am I going to cop out and say there was some sort of naughty business going on with the whole BlackRock news and people dumping and things like this? No, I don't think I am. I just, sometimes the markets just, again, don't care what you think. Altcoins just capitulated. This looks just like a Polkadot chart, just like a Cardano chart, an Algorand chart. There's always going to be things that are involved in that, but I think it's just taking a little bit longer to get there. I still could absolutely see $2.05, and that it could go higher than that. That's just our sort of where we think it could go. We've got to see technical patterns play out to get us there, but we think HBAR is going to do very well. Let's take a look at some more questions. Allin, do you think Bitcoin will fill the wick from early August's dip? Reckon we see 45K. I've heard of gap filling, never wick filling. I don't think you need to fill a wick. I think if there's a gap, like on the CME, and the thing is, I remember getting schooled by Francis Hunt, who's a market sniper. You should all be following him in terms of a technical analyst, second to none. And I'm included in that. Far better technical analyst than I could probably ever hope to be. He's been doing it as long as I've been alive. And he really schooled me on the thing is with wicks, it's not wicks, sorry. Gaps is when you get a gap, that's because a market was traditionally only open 5 days a week and only over certain times. So when you got an influx of orders, it would gap up or down. And there was a lot of them getting filled, more than not, to a staggering degree, 90+%. The thing is with crypto, it's a 24/7 market. Now, regardless of that, you do have the CME gap getting filled quite consistently. I don't believe, we'll look at, you know what, I'll pull up the CME because that's the only thing we'd have a gap on. Bitcoin CME. I don't think there is a gap at 45. There's no gaps in this on the weekly. You can see what I mean. These gaps, they do get filled, but the thing is with Bitcoin, it's a 24/7 market, right? So do the gaps count in the same way? They do get filled often, but I don't see any gaps. Wicks aren't the same as gaps because the price is actually traded there. So I don't see any gaps at 45. Let's take some more questions. I'll just see how we are for time, guys. We've got an interview coming up on the back end of this. Yeah, sometimes wicks can be. I saw good comment there actually in regards to wicks can often be a liquidity grab. Have we got any more questions? Which sol alts are you interested in? Oh, I was looking at a lot of sol alts in regards to just before the whole FTX thing. And, probably I think Tulip, there was a number of ones I was looking at back then. I don't actually really look at sol alts, but I think Solana is going to do extremely well. We've got a 2K Sol target. Sol BTC looks great. Sol ETH looks great. There's a great picture when it comes to Sol generally. Not sure if we have any more questions coming in. Just double check. ICP outlook. Yeah, so we've looked at ICP briefly there. I think, again, it's broken out. It's on support. We're likely going to see that continuation. $10 XRP in the next few weeks. I'm not so convinced. We're going to see $10 in the next 2 weeks or few weeks. However, I do think we will see. Our prediction is $19.27. I think you're going to see that. And now, whether that plays out this cycle or takes a little bit longer, like what we saw with Amazon, is still to be seen. Price prediction link, we don't really have one. I think the last one we gave was sort of $63-ish. But that's not. You can't take any of this to the bank. Just things we're looking at. Just because we're potentially looking at things doesn't mean they're going to play out. Remember, you can lose all your money in the cryptocurrency space. When to sell out of alts. We have just released a course for the Patreon in regards to that. Right then, guys. I'm going to love and leave you on that note. We will be back live streaming on Wednesday. That's going to take place over the rate decision that we hopefully prepped you all for. Remember, a like and a comment on this live stream is always greatly appreciated. On that note, I'm going to love and leave you. Thanks a lot for watching, ladies and gentlemen. I'll see you all in tomorrow's daily market update.